All right. And do you guys see a PowerPoint slide? Okay. Um, I'm starting to learn this after a year of struggling. Um, so yeah, so I'm gonna just start with the introduction stuff, right? So that you guys know a little bit about me. I'm Ben Woodruff. I'm a finance professor here at EKU. I I'm from Alabama originally. That's also where I went to grad school. I got my PhD. So there's just some pictures of like stuff that is kind of me. I like to wear bow ties. It's like a thing that I do. I used to live in Bangladesh. That's why you see me drinking that Coca-Cola there. That's when I lived in Bangladesh. I used to do developmental finance. So micro banking, microfinance type stuff, living in villages, that kind of stuff. So I did that. I don't know if you guys ever seen The Never Ending Story, but I rode Falkor. There's a film studio in Bavaria where they filmed all that, and it was there. And I'm like, if I fly all the way to Germany and see Falkor, the Luck Dragon, I'm gonna hop on it. So and then that Southern Charm, I just call her Charm. She's a service dog, but she's at the stage of her life where she doesn't do much service now. So she's more of just a dog, but she's a bit older now. So, but yeah, so that's just a bit about me. A little bit about my personality, I guess, too. So I'm gonna just kind of jump in. These are terms we'll just kind of talk through and make sure you still remember this stuff. This comes from all the accounting you just did with Dr. Isaacs. So did she go over the difference in accrual and cash-based accounting systems? Somebody want to toss out like what the difference is between accrual-based and cash-based? Anyone?
I'll take a stab at it. So the cash base is when you record the transaction when you receive payment.
Okay, so accrual base is when you keep an account, right? Like you the credit out there somewhere, and so you're not actually making payments. You're letting this build up, and then you're going to have allowances or things like that. Cash based is normally what we do as individuals, right? Where it's like I've got the money, I'm paying for it right now. Even if it's not cash, it's coming. It's when you swipe your card, it's coming out of your account then, right? It's not one of these things that would be after 30 days or something like that. So that matters because we're going to be doing accrual based accounting. So just understand we're going to recognize revenue even before they get paid for it. That can cause issues with liquidity because on paper you're good for it, but you haven't actually received the money yet, that type of thing. So do you guys remember the difference between revenue and profit?
Yes.
Okay, so tell me about it.
Revenue is like the money you've made prior to any sort of expenses being taken out, and then profit is kind of your end line after expenses and taxes have been paid.
Right. So when you get all the way down to that net income piece at the very bottom, revenue is like that top line. When we're doing the income statement, we always start with, hey, this was our revenue, right? And we want that number to be high, but what's going to really matter though is once we subtract off all of those expenses, what's that net income at the bottom? And that's our profit, right? So talked about accrual-based accounting. And so that leads into why we care about cash flow, right? So just to remind you, the cash flow, that's when we're actually looking at, well, how much money did I make, right? How much cash came in, how much cash went out, right? So if you remember, there are expenses that we have that don't incur a cash flow, right? So an example of that would be depreciation, or if you had some sort of amortized cost, depreciation and amortization, we kind of bundle those together. But But anytime you have that depreciation, you don't physically pay the money out. That's just you trying to account for how machinery is wearing down, right? Or your vehicles or whatever it is that's changing. So with our cash flow, we have to account for that. Do you guys remember the other changes that we need to make besides adding back depreciation? So we broke out, what we do with our cash flows, we have to break out that tax shield separate. So if you remember, when we would have to go back because the taxes are after we've accounted for that depreciation. Right. So assets and liabilities. Do you guys remember the two sides of the balance sheet? Assets are the things that you own, liabilities are the things that you owe. Right. So in finance, just so you understand what our job is we're trying to balance the assets and the liabilities. Right. So when you were in the accounting class and you were looking at a balance sheet, right, and you would just add up all your assets, right? You start with cash, right? The most liquid asset goes first, right? And you work your way down through all your current, right? And then you get your long-term assets, and you have like property, plant, and equipment. You have intangible assets, perhaps like goodwill, right? All of those things show up on that asset side, right? And then liabilities will have, oh, well, I've got these debts that I owe. I've got this short-term line of credit that I need to pay off. I've got this long-term bond issue. You know, you'd have those pieces. In finance, what we're trying to do is match up what we call the duration of those. So we're trying to make sure that if this loan is going to last on average about 8 years, then the asset needs to last about 8 years. Right. And so if the asset is longer lived, then maybe I need to look at changing the financing on it because it's going to last so long. I'm not going to benefit from paying it off early. Or maybe I would because I want the other cash for other reasons. But that's what we're doing in finance is we're trying to match our assets and our liabilities. And it's not just matching the numbers, but the duration and the structure of the cash flow. So is this a fixed rate or is this an adjustable rate? Right. And I might care a lot when trying to match that with an asset that might be fixed rate or an adjustable rate. So that's the kind of things that we do. So yeah, if any of this stuff, you know, it doesn't sound too familiar, just go back to the video later. Because like I said, I'm recording it. I'll put it on that YouTube playlist that I created. I created another video and I was trying to put it up and it kept like YouTube was not taking it. And I don't know much about YouTube, so I'm sure I'm just mess something up. But there will be another video that goes up that goes over all this accounting stuff. I talk about the ratios and all that stuff in there. But we're trying something new with these classes. I know you guys got to do the experiment with Dr. Isaacs and her teaching it online as well, because we're going to have this online component. So I'm trying to create the videos and put them out there so you guys can watch them whenever, so we don't have to always be synchronous or whatever. Although I do enjoy the synchronous meetups just so that you can see other people. Otherwise, I speak into the void and I don't get to see anybody. But yeah, so let me just kind of move on a little bit and ask kind of a weird question maybe. But what is money? And you don't have to give a book answer, right? Just to you. If I said, hey, I need money or I have money, right? What is money, right? What makes something money?
I'll take a stab. Just any item that I guess can be used to like make a transaction, sort of. So I mean, it doesn't have to be like paper or coin like we use. I mean, back in bartering days, it could have been, I don't know, a bag of rice or something. But if it's been exchanged for something else, I guess.
Yeah, that's actually exactly right. It's an item that's used for payment in a society. It doesn't have to be for trade. I mean, it can be for like paying a debt or something like that. And you mentioned it doesn't have to be a coin. The most widely used form of currency are those little cockerel shells that they make the puka shell necklaces out of. Those little shells, that's actually the most widely used currency in the history of the world. Because trade villages all along coastlines from Africa through Asia all use that as currency because it was something that everybody could get access to. So the idea was, if you're poor, it's your own fault for not going out into the ocean and at least trying to scrape up shells, right? So so that was like the idea for trade. So but yeah, you're exactly right. Money is something that's going to be accepted as payment in the society. We used to always say it's any item, but now we got to be careful because there's a lot of stuff that's not physical, right? And it's very much money. And so it's an item or some sort of record that's accepted as payment in society. And so when I learned about money, I learned about what's known as the 3 properties. Now, they used to call it the 4 properties. I'm going to show you all 4 and kind of go over that. But the 3 properties of money, as I learned it, first is exactly what Vivian said. It's a medium of exchange, right? It's something that 2 people can agree. Yes, that, this is equal to 1 shiny rock or whatever, right? We can use this, that I give this to you, and then in the future you can give that back to me for a different exchange, right? And so that's the whole purpose of using money instead of a straight barter system. Is, it allows you to make change the way you can't when you want 2.5 goats, right? You can't exactly make change that way, but currency, gives you that flexibility. And so it acts as that medium of exchange. The second one is the unit of account, right? And so what this means is basically my dollar is equal to your dollar, right? So we can't do Van Gogh paintings because my Van Gogh might be worth twice as much as your Van Gogh, right? So that's why that wouldn't be a very good type of money, because they need to be equal, right? Now we know if we were using something like silver coins, right? Like ancient Rome had the drachma, or no, that was Greece had the drachma, the denarii. Sorry, the Rome had the denarii. But people would clip the coins, right? They would shave off the edges to get a little bit of silver, right? And you ended up sometimes with a coin, and it's supposed to weigh this much, and it doesn't weigh but 80% of that, because people have taken a little bit off of it, right? But for in our case, a dollar is a dollar, and I don't care if that dollar was once held by a president or anything like that. It's a dollar, and it's going to buy me this soda or whatever I'm using it for. So because it's able to be the same no matter what, it's a unit of measure the same way. Well, I say a unit of account, but you think of it like a unit of measure. So like a meter is a meter, a foot's a foot, a pound's a pound, right? A dollar's a dollar, right? So so that's that one. And then the lastly is it's a store of value, right? Now you can argue with inflation how much of a store of value money is, but that's kind of a separate thing from the money itself, but because what we're really meaning is like it's not going to go bad, right? It's not that my dollar over time is degrading, and then I go try to spend my dollar and it's not a full dollar anymore. So if you had your money was coconuts or something like that could spoil over time, then you would have that issue, right? So so that's the 3 that I learned: the medium of exchange, the unit of value, and then the or store of value. So the 4th one was standard of value, because that's what allowed you to pay through time. I don't know if they dropped this because of like inflation, because this goes back. There's a saying, what's the properties of money? I know they number 4. It's a medium, a unit, a standard, and a store. Like that was like a little, I guess bankers had nursery rhymes. I don't know, but that was a way to remember the properties of money. And so I've never heard people actually use that. I've only had people tell me the same story I just told you about. There used to be this 4th one, that people would also talk about how it would set a standard, but we're not on the gold standard or anything like that anymore. So it's not quite the same. So this presentation that I'm doing for you real quick, this was like my old intro, welcome to finance, that first day slide. So I'm going to show you this slide. This was from last year. So things are a little bit different now. But you see here, August the 3rd of 2020, right? The amount of money, right? M1 money, right? So this is not just currency, but this is money, was about $5.5 trillion, right? Because this is in billions of dollars, right? So 5,000 billions a trillion, right? So $5.5 trillion. That's how much money there was. It's not how much the America was worth, right? Because like real estate and all that other stuff, that has value. But as far as if you took everybody's bank accounts, right, and had everybody empty out their wallets, right, and you just gathered up all of the money in every form, that was the U.S. money supply in August of 2020. I'm going to show you what it is now. They've actually discontinued the chart, so I guess that tells you where we went after that. But what you see here, so this is the recession that we had right in 1980, right? So this was following the Iran hostage crisis. I know a lot of you guys are pretty young, so you probably don't remember like the Miracle on Ice hockey game and all that kind of stuff. So this is very, very Cold War here in 1980. And then we had this recession. And so these gray bars, this is the one right after the Gulf War, 91, 92. And then this right here is the dot-com bubble bursting in early 2000s. And you kind of see how the money did. And then after that, you see this increase in money, right? And then this is the housing financial collapse, right, in 2008. Right, that's what this gray bar here represents, right? And then you see like this rapid increase that occurred right here. This was quantitative easing. So if you guys remember QE1, QE2, QE3, that's what this blip right here is, right? At the time, that was the largest expansion of money in the history of the United States, right? And then that just became a Tuesday, right? So that's how money has been. And then once we basically shut down for the coronavirus, this is early of 2020, you see we just threw open the gates, right? Now, if we're looking at currency, so what about the dollar bills, right? All those green slips of paper, this was the currency component. So if you notice, currency did upswing as well, but not nearly as much, right? So there was almost $2 trillion in extra currency. Or just in currency, I should say, not extra. It's about an extra, I don't know, maybe 300 billion, right? So that's like helicopter money. I think they just fly a helicopter out and just throw money out of the sides of it. I don't know how they push that much currency out into the system, but they did it. You see how that currency shot up. So let me hop out of here real quick. And then I'm going to share this screen with you. All right. Can you guys see this okay? Right. So this is the same thing. This is the Fred is the Federal Reserve in St. Louis. It's like Federal Reserve Economic Data or something like that. But the St. Louis Fed is the one that keeps up with all this stuff, right? So this is that same chart that we were looking at, but then they just don't do it anymore, right? I don't think people like seeing how high these numbers were, because then you see here it's already up to $18 trillion, right? Where before, let's see, where was that? That was $5.5 trillion. So from whatever that was, August the 3rd, 2020, until February 1st, we went from 5.5 to $18 trillion of money, right? So that's how much money has just been pumped out, right? Like I don't know how else to say that. But they don't show this one anymore. You can get this data. This is money stock. It's a different way of talking about it. But this is monthly data, so it's a lot smoother. Which is not necessarily bad, but I'm just letting you know. That's why, like, if you look down here at this one, you don't see the jagged line. It just kind of, bleeps up a little bit right there, November to December, but yeah, so we've been making money like we've have not before, right? This is really an interesting time. We actually have inflation now. We haven't had inflation for like 8 years, because they've kept the interest rates low for so long. But I'm sure you guys have heard about the $1.9 trillion stimulus, right? That's another 2 trillion on top of, we've already talked about how much money is out there. So eventually, it gets to be real money, I guess, right? When you start dealing with a billion here and a billion there, eventually it'll be some real money, I guess. But let me get back to the presentation there. So yeah, I just want to kind of make it aside just to talk about what is money, right? And so it's not just the currency, but it's all the ones and zeros on computers, right, out there in the wide world, that kind of thing. So but yeah, so this is an interesting time. So we'll sort of see where that goes. So so some of the things that I don't expect you necessarily to have encountered yet, but it's things that you're going to need for my class. And then also, I believe it is, oh man, who's teaching RMI? You guys remember? I think it's Dr. Gardner.
Yeah, I had a Dr. Gardner for it.
Okay. So you've already taken it then.
Well, no, not for MBA. It is Dr. Gardner. I had it for risk management undergrad.
Oh, okay.
Sorry.
Well, like if you already had risk management, then like risk tolerance, stuff like that, you've already been familiar with. But if all you had was the accounting class, I don't think these would have necessarily come up. So this is like why I want to kind of mention these, and then we'll go into more depth in later lectures, right? This is a sort of here's the stuff we're going to do class. So bull markets and bear markets, have you guys heard those terms before? And if so, what is it? What's a bull market and what's a bear market?
So a bull market is, I guess you could say, the past 3-4 months of the stock market right now has been a bull run. Just when like the S&P, the NYSE, everything's just up percentages, and then a bull and then a bear run would be when the entirety of the market's down.
Right. So
Correction.
So bulls, we always think of being like the slow and steady. So that's what investors want. They buy hoping they'll just grow, right? And then bear markets are when it goes down. And the reason they call it a bull and a bear is when bulls attack you. Like, I don't know if you've ever seen rodeos or anything like that, but what they do is they try to go low and they hook their horn and try to flip you, right? And so they go from down to up, right? My mother raises cattle, but they're Black Angus. They don't even have horns, so they just kind of push each other. They don't really do the whole head thing. But yes, but that's what the way a bull attacks. So we say a bull market is that it starts low and it starts going up, right? When bears attack, bears get up on their hind legs and then they use their weight and then they'll swipe as they're coming down, right? So it gives them that much more force as they're going, right? And so bears start high, then they attack to go low, right? And so bulls go low to high, and bears, they attack high to low. So that's an easy way to me to remember those. Risk tolerance, this is how willing an individual is willing to handle risk, right? And so if you ever go into financial services, like if you become a broker or anything like that, this is like day one. We're going to teach you how to calculate risk tolerance, right? You know, because you go through these series of questions with people, and you know, would you rather have a steady investment that pays you $1 a day, or would you rather have a more risky investment that may pay you $5, but you only get it, you know, between 3 and 7 days or something like that, right? And you ask them these questions to get a sense for, you know, how accepting are they to take risk, right? As part of knowing your client. So, so there's not a right answer or wrong answer on this. I mean, people's talk, you know, your personality is your personality, right? You're going to like what you like. So there's no wrong answer there, but we need to make sure that any investments make sense for you, right? And so we're going to talk a little bit about portfolios, portfolio decisions and stuff. And so it's important in that case. Liquidity probably has already come up in accounting because I'm sure told you about current ratios and quick ratios and that kind of thing. Liquidity is a huge deal within finance. Like this is the thing that keeps people up at night because you can have a beautiful balance sheet, but then, you know, hey, if something were to happen and I get a margin call, I'm not sure where this cash is going to come from. So that's important then anyway. Asset allocation, diversification. This is, again, goes to that building a portfolio. So we're going to talk about the ways that we're going to minimize risk. This is a financial decision-making class, so we have to understand risk. So technically there's going to be the RMI course, it's decisions under risk. It's going to go into a lot more of that, but we just need to go ahead and mention that here. Common stock versus preferred stock. Common stock is what we normally think of as stock, full voting rights. You know, you get a dividend, that type of thing. Preferred stock normally has a set dividend. And it's almost a way of lending money without it being a loan, because you end up agreeing to this preferred stock. They're going to pay, you know, like 8.5 or whatever, with the understanding that it's going to be callable. They can buy it from you, you know, in the future at some price, you know. So it's just a way to do that, but you're not actually it's not actually debt, it's equity. So the way it looks on their balance sheet's a little different. And it also provides like a liquidity source, right? Because you could sell this preferred stock. So it's a way to go out and get that, but it doesn't dilute your common stock shareholders. You don't have to bring it through the same channel. So dividends, those are what stock can pay, right? You know, when you calculate your net income, you can retain a portion in retained earnings to further grow the company, or you can pay it out in dividends. So this is where that would come up. We're going to deal mostly with corporate bonds, but I want to mention treasuries and muni bonds. Treasuries, normally they start at 100,000. This is the U.S. securities. So I can show you what U.S. security auctions look like. It's but they'll just go out and say, hey, we're putting up this much. They do them every week because, I mean, you see how much money we deal with, right? So constantly they go into the markets and buying and selling securities. Municipal bonds are normally $5,000. Corporate bonds are normally $1,000. So you'll see a lot of people do, you know, you always just assume 1,000, but municipal bonds are 5,000, but you get special tax treatment with those. And so it's often important to consider that. Coupon payments, that's the interest portion of a bond. Let me show you where that comes from. It's one of those things that sounds almost unbelievable, but it is true. Let me share this. I don't know if you guys can, and I know you can't read all of that text in there, but this is a bond, right? And it's $100 face value bond. And these right here are all of the coupon payments for the bond. So now we just talk about bonds and then it pays a coupon. It used to literally come with all of the coupons attached. And so the very, very rich people, once a month, they'd get whichever bonds come up, because bonds pay every 6 months. So you normally, stagger them. So every month you'd get that much bonds and you'd pull out your scissors and you would clip coupons. That's where that comes from. And so you would clip the coupons and then you could take those coupons down to the bank and redeem it for its value. So we still call them coupons. I don't know if you guys ever watched the movie Die Hard, but the terrorists, they had broke into Nakatomi Tower, and they were trying to steal all those bearer bonds, right? And the guy said, I got the bearer bonds and the coupons are attached, because that's literally how they used to be. Bearer bonds, with the bearer of the bond was the owner. So there was no record of the owner, right? So you just had a big box of, full of slips of paper that anybody could turn in to get hundreds of thousands of dollars, right? So we don't sell those anymore. So you couldn't really make Die Hard again. Those are illegal now. It turns out being able to carry a briefcase, and that briefcase is carrying slips of paper worth, $50 million is just too enticing for drug cartels. So they finally said, maybe we should put a stop to this. And so that's why bearer bonds are illegal, because it was used for laundering purposes back in the day. So let me share this one with you. Sorry, I keep going back and forth. I go on tangents sometimes, so I just like to tell people where stuff comes from. And then as far as options and derivatives, we're not going to get in too much detail about that. I do teach derivatives, though. I'm actually teaching it this semester. So we can definitely talk about it, but it won't actually be too much in the class, other than it will come up and talk about them a little bit. So how do we make financial decisions, right? So what we normally think of, this is like the theory of the firm. That's like, at least that was taught to me when I first went to grad school. The purpose of the firm is to maximize the value for the shareholder, right? That's the whole reason it's there. It's to make money, right? Now, how do you do that? Generally, you want to take on projects that generate more money than they cost. Right. I know this sounds like, well, of course you would take on projects that make more money than they cost. Well, you'd be surprised at how sometimes you have to tell people that. The whole purpose of doing this is to make money. And we're only going to make money if our projects make more money than they cost. Right. Now we have to worry about the time value of money as well in finance. That's a concern for us. So we need to look at when we get paid, not just how much we get paid. But that's what we do, right? And normally what we're going to talk about with these projects is something called net present value, right? If the net present value is greater than 0, then it's going to make more than it will cost, given the discount rate that we've used, for like inflation and all of those things. It's not perfect. You could take on do the calculation and it's worth, a plus $10 million, and you do the project and you lose money anyway, right? Because it turns out you didn't sell that many units. You didn't do this, you didn't do that, right? So these are all based on projections, but we try to do the best job that we can, right? And we're trying to take on projects that are making more money for the firm. So we could retain those earnings and keep growing the firm. We could pay those earnings back to the owner as a dividend, but either way, the goal of management is to maximize the value of the firm for the owners, right? This also includes what we call the opportunity cost, right? So instead of spending $100,000 to buy this machine and to start selling that fancy ice cream cone or whatever, I could have taken that $100,000 and gotten that automatic grilling robot, and our hamburger costs would have gone down instead, right? So it's not just did it make money, but what did I give up that I could have done instead, right? So when we're making our finance decision, that's what we're looking at. You also have to remember things like borrowing costs, right? And borrowing costs are coming in a couple of different ways. So first of all, there's just the fact you have to pay it back. And a lot of times people don't really consider that, right? Like small business owners, I used to do consulting. I didn't tell you too much about my education, but I got my MBA, my own MBA about 20 years ago, right? So I did that, and then I went and worked, and I went back later and got my PhD. So I'd worked as a consultant for a while, and you'd be surprised at how often, like a business owner will calculate everything out and then just ignore the fact that they're paying interest on their credit card, right? It's like you're carrying this on your credit card and you're paying 22% or whatever it was, so you have to remember those borrowing costs and things as well. The other thing is something known as debt overhang. So I don't know if you've ever heard this term before, debt overhang. But this is basically when, because you have this ongoing debt obligation, right? I have to pay, $500 for a student loan, right? If that's the case, that's $500 that you don't have when somebody says, hey, I'm going to open up a hot dog cart, a little push cart, only need $500 if you want to go in half with me, right? And I'm going to work the Legends ballpark game or whatever, and I'll split the proceeds with you, but you don't have the 500 because you had to send that to Sally Mae, right? And so there's the other opportunities that you just don't have available because your cash flow gets tied up servicing that debt, right? So there's also these types of effects that happen with debt, right? So this isn't me being Dave Ramsey and saying don't have credit cards or anything like that. Just letting you understand that debt does have that cost though. Right. Okay. Then I've already mentioned this is net present value. So other than taking on projects, because that's operations, right? That's when you're a paper company and that's you making paper, right? Or you're a restaurant and that's you selling pizzas, right? That's what we're talking about with taking on those projects. Within finance, another thing we can do is better allocate capital, right? Like we have a lot of just cash sitting in a box, we can go and put that somewhere else, right? We can say, hey, I know we're saving up this money to repair this equipment in 8 years. Why don't we put it into a bond that will mature in 8 years? So we'll get the money then, but then we'll get higher interest between now and then, or something like that, right? Like that reallocation of capital is a way that we can bring that in. Another thing is trying to move to something. We're going to get into this later in investments when we touch on that, but trying to get to what's known as this efficient frontier, right? And so normally if someone just has a random portfolio, if you just randomly gather some stocks, put them together, right? You could take that bundle of stocks and you could say, okay, let me take this risk and return profile, and I can either say I'm comfortable with this risk, but let me reshape this and get a higher return. Or you could say, I'm comfortable with this return. This is all the money I really need for like ongoing operations. And then you can shift it and make it much less risk, right? And so that's some of the stuff that we would do is by changing the nature of our investments, get us to that efficient frontier, right? And then the other thing is what we call the weighted average cost of capital. This is our capital structure. So how much of our company is the debt piece, right, on that balance sheet? How much of it is the equity piece, right? Because as a general rule, debt is cheaper. Okay, so the debt, like a bond holder, doesn't require as much of a return as an investor would. Investors understand they're not always going to get a high return, but what they call their required return. So what they expect to get on average is going to be higher, right? And then bonds, you also get some other advantages with debt, a debt shield from taxes, that type of thing. So we have to balance all that because debt comes with downsides like that debt overhang that I'd mentioned, right? So there's downsides to it. Plus, you can't expect to get great debt when 80% of your company is debt. You're probably not going to get another line of credit that's very favorable, right? Because they understand I'm at the end of this long line of other people that you owe money to. So, so there are limits also in how much debt you can have. Right. And so, yeah, I just mentioned that was capital structure. So, so since you guys just did accounting, just to tell you a little bit about the difference, accounting, their primary focus is really making sure that we properly recorded events that transpired, right? Are our financial statements accurate? Are they free of material misstatement, you know, and that type of thing. In finance, normally what we're doing is we're saying, okay, this is where things are. That piece of equipment will wear out in 8 years. How much is it going to cost us to, you know, replace it at that time, you know? Or is this an opportunity, you know, for those people in marketing that said, hey, we should switch to doing this instead? You know, if we made that switch, then how much money would that need? And then what do I need to put aside now to have it when it's ready? Right, that type of decision. So, so that's more our focus. So, and then this is just to sort of lead into like the risk management, because that's what you'll have after me. So, if you think of economics, right, it's just how we allocate scarce resources within whatever boundary constraints we have, right? So, you know, you can only work so many hours in a day. So how do you split up how much you work and how much you hang out and just rest, and then how much time you're sleeping, right? Or you only have so much money because you get this much money each month and you have to pay your bills, and with what's left over, you know, you pay for things, right? So you're allocating whatever limited resources you have. In finance, what we're doing is we're saying, okay, well, now let's talk about risk and uncertainty. Like, I don't know what tomorrow looks like. You know, my transmission might go out on my car, right? That kind of thing can just happen. And so understanding how we're making the decisions that we are now that we have this risk and uncertainty piece, right? And generally everyone is risk averse. It's just to what extent, right? But we're all going to be risk averse, which means we're going to not like having that uncertainty, right? And so risk management is when you go out, you figure out, okay, what exactly is my exposure, right? Like, you know, do we have tornadoes? Do we have floods? Do we have hurricanes? You know, whatever there is. And then we figure out, okay, this is how much I'm willing to keep, and this is how much I want to get rid of. And then you can go to the market and figure out what's your acceptance of risk, right? So if you think about your auto insurance, right, there's a deductible, right? So what you've said is, well, the first $250 or $500, I'll bear that cost myself, right? Because that's my deductible. So anything that's less than that, I'm paying for, right? But then the high dollar stuff, like, well, what if I total out my car? Okay, I want insurance for that, right? And so that's all we're doing when we're dealing with risk management is how much of this risk am I willing to keep, and how much do I need to offset, and then how much will that cost me? So. And by the way, I'm a finance professor, but my research is in risk management. So that's here at EKU, they're separated out, but at a lot of places like my last school, risk management was just part of finance. Like there were 2 risk management professors in the finance department. So, but yeah, and so that is the last of my slides. I will stop my share now. Okay, and I see we have 19 participants now. So everybody's here. But I still will have that recording. I'll put it on YouTube. You'll see another one go. Did anybody watch the other video that I put up the other day? Okay. I know they're not terribly exciting, but it was just a way to get that out there. That way we don't have to do this for 3 hours every night, right? I try to do more of that stuff ahead of time, and that's your lecture. It's still an hour. It's just an hour you can do Saturday afternoon while you're boiling rice or whatever you do, right? So yeah, so that's how that that'll be going forward. I'm gonna put lectures, and then any stuff for you to read, I'm gonna put out there in course documents, right? So instead of giving you guys a book, I'm just giving you guys documents to read, right? So they're PDFs though, so if you want to print them out, you can. One thing that I like to do is case studies. I think you guys were working in teams before, is that right? All right, so you know who your team members are, right? You see them here, you can get in touch with them. If you don't like your team, let me know, but otherwise I just presume everybody can still work together. You know, but if there is an issue, I know that can come up or whatever, so just let me know, but otherwise we'll just go with those same teams. I'm going to put up a document about how to read cases. And so as we go through this course, what we're going to spend most of our time on, and during these meetings where we're synchronous, is we're going to go through cases, right? And so each week we'll have a new company that we'll go through. So I'm going to start with like a little, hey, here's how to read a case, and then here's like an intro case that it walks you through and everything. So I'll put those documents up as well. And then starting next week, we'll do cases as we go through these. And so for the cases, I'll put up the case. They start out being pretty short, like 8 pages or something. And then later on, they get to be a little thicker, you know, about 20, 22 pages. And then they also will, not early on because we're not really doing anything yet, but they'll also have Excel spreadsheets. So you don't have to like try to type all the stuff that's in the PDF file. There's an Excel that'll be posted right beside it, you know, so all those financial ratios and all that kind of stuff that you want to do, it's already in Excel. So you can just say, okay, this number divided by that number, you know, drag down for the whole column or whatever, and you know, that kind of stuff. So I normally try to teach more and more, you know, using Excel because everybody has Excel. You know, I can't assume that you're going to be running, you know, anything super fancy. I mean, Excel does, you know, 99% of what people need it to do, right? So and since it's part of that Office suite, if you can do it in Excel, you probably do it at work wherever you are. So so yeah, so that's how that's going to work. Let's see, I'm trying to let me pull. All right, so I have like on the syllabus, I say discussion board. The presentation is going to be like, how many teams are there? Is it 6? 4? 4 teams? Okay, so we're only going to do 4 cases because that way each team will do 1 case. And I say like weekly quiz exams. The quiz is probably going to be like a little short oral thing that we just kind of do to, you know, make sure everybody's tracking along, you know, kind of thing. And then the exams are probably going to be take home, but you know, we might end up start talking about these cases and we might just end up saying, hey, just submit your write-up and that'll be an exam or something like that, you know, because you're already doing that kind of write-up. The reason I'm not big on like trying to do a bunch of homework or exams is because, you know, I'm trying to make this as applicable as possible for, especially for those of you that are currently at work, you know, like you already have a job and you don't need to do some math problems of, you know, whatever, you know, so I'm trying to cut out a lot of that kind of stuff. And that's why we're going to try to focus on using the cases and stuff as much as possible. Let's use some real world data and make some real world decisions. So, oh, go ahead. Is that Janan?
Yeah, Janan. Dr. Woodruff, As far as the quizzes go, will the quizzes be over the material, like the lecture? Because I see that you got a quiz for week 1. Will that be over like today's lecture, the material that you covered?
Yeah, it's probably going to end up being like more like a little 1 or 2 question thing that you do, but yeah,
Okay.
something on like the video that I posted.
Okay, thank you.
So yeah, well, it won't be the conversations that we're having here. It's going to be based on the videos that I put. And I'm going to keep everything in that playlist, right, as I make them. Now I'm going to put some other videos in there as well. I'll make announcements when I do, because sometimes there'll be another video that I'm like, hey, this kind of explains that pretty well, and sometimes it might be like Investopedia because they've got some cool ones, but even I'm trying to think that the Freakonomics blog, I don't know if you guys have ever read that. It's part of the New York Times, but there was a book called Freakonomics, and then there was a sequel called Super Freakonomics. I was thinking I had one on my shelf back there, but I was going to show you the cover. But it just looks at really weird things in economics. And when I say in economics, I mean, it's not necessarily like sumo wrestling. You may not say that's economics. It's like, well, there's a lot of gambling involved, So, but they were able to look at weird patterns, right? Because normally in economics, the big takeaway is people respond to incentives, right? And so so they do a lot of stuff that demonstrates that. So I may put some of those videos in, because anytime you look at something in the news and you're like, why in the world did they do that? There was some incentive, right? There was some reason that they did it, and like why are banks taking all this money? The government's giving it to them. Why wouldn't you take it? Right? You might say this isn't good, this, for long-term stability, whatever. Well, are you going to turn down free money? So so yeah. And then I think Erica, did you raise your hand?
No, I was just being really happy that you said that you were not going to assign a lot of homeworks and it was going to be just based on practical application.
Right. Okay, that was just like a friendly wave.
Yeah, it was just a thumbs up.
Gotcha. Okay. I just saw the little thing flashing, and I'm trying to learn how to do this, but I'm normally sharing a screen, and when I share a screen, I don't see all of your little faces, because so it's hard sometimes trying to run the chat room and all of that, keeping up with everything. So and then I wanted to talk about something else real quick. I hope you're not upset that I'm going to do this. I'm trying to, who emailed me earlier today with a bunch of questions if I want to talk about it?
Yeah, that was me, Dr. Woodruff.
Okay. I'm going to look for your email. We'll talk about it. Let me pull it up.
Yeah.
I get like 800 emails a day, so I had to like roll.
I understand.
Yeah. All right. So you say, there's not a text. Is there a text that I would recommend? Honestly, there's not really. Books aren't written the way they used to be. Like I have old textbooks from, like the 90s, and they're still good.
Yeah.
Like,
I believe it.
But as far as textbooks, I really just don't like, to me, with what you said in your other questions, I really think like blogs, like financial blogs, you're gonna read a lot more current stuff, right? Like reasoning and stuff like that. I have if you ever want to come by, I'll show you. I'm in BTC 130.
Yeah.
So if you're ever here on campus, I'll like kind of show you what I have, and we can kind of talk. I used to use one book when I was, because I was at Alabama before I came here.
Mm-hmm.
Used one book for 3 of my classes because it covered. It was the one that I used for my business finance, my investments, and my financial markets, right? Because it covered all of that material. Now the textbook cost $500, but the student got to use it for 3 classes, right? And so I don't do that here because I try to, not blow up the students, there I didn't feel guilty because I was like, look, if you keep taking me, you'll use it for at least 3 classes because, it's such a book. Okay. And then as far as IPOs, so we can go over the IPO process sometime. I can actually just do a quick presentation, kind of walking through what happens. But to kind of skip over a whole lot of other steps that you don't care about right now, there's a selling syndicate, right? And so this is like a lead investment banker that's going to have a whole group of other banks under them, and each member of the syndicate will get so much, right? So depending on your brokerage house, you may be able to get IPOs now. They'll probably need to do a financial screen, but you'd be allowed to get it through your brokerage house for anything at least they're part of the syndicate for. Right. So yeah. And then you ask about candlestick charting, like you want to know like how to do that? Or
Yeah.
Okay. Well, so like, are you thinking in Excel?
Well, I know they have candlestick charts, on the stock market, or you can go to different websites to look at them. I just want to, understand them,
Oh, okay. Well,
I have watched some
okay.
YouTube videos on them.
Yeah. Let me pull up one then. We'll just right. Let me share my screen real quick. So this is a candlestick right here. Right, everybody sees that. There we are. Right. Okay.
Is this just based on like emotions and stuff like that at a particular point in time?
Well, so this is for each day, right?
Yeah.
And so what it is the one line here is the opening price.
Yep.
And then the other line in the candle is the closing price.
Yeah.
So this one is green. So it opened low and closed high because it went up that day. The lowest point of the wick is the lowest price that it traded during the day. So it was the intraday low. And then this one at the very top is the intraday high. Right.
Yeah.
So by looking at like the pattern, this is like the people that do the technical analysis, right? And they're looking for like, does it peak and then come back and then hit a second peak, or did it break out of a channel? That kind of thing. That's what they're doing. Back when I first was getting licensed and everything, because I started trading in commodities back in like 93, 94. And we used to use graph paper and rulers still. We would draw these out. But yeah, and so these candlesticks are to show you, like, you can get a sense for, okay, well, it went up a little bit and then the price collapsed and then it dropped for a few more days. It had a slight rally, then it dropped some more. Something happened here. I don't know if this was like a reverse split. I don't know what happened, why the stock price jumped up and then kept falling. But yeah, and so you'll see it. These are the colored ones that are easier. Otherwise, you leave it empty if you're going up and you fill it in if you're going down, right? So this would be the red ones and this would be the green ones. But yeah, we can definitely do like a day, like one of our weeks if you want. I mean, I'll definitely throw in a whole little investment piece.
Yeah, I'd like that. And then I think a lot of, we're going to go towards a decentralized finance where we're going towards all this cryptocurrency.
Yeah, so I don't know nearly enough about cryptocurrencies. I know more about blockchain, which is like the what do you call it, the technology or whatever underlying it. But most of my experience with blockchain was around security stuff. So like virtual contracting, things like that, using blockchain. So I can't speak too much to it other than I might be able to get a guest speaker or something on that. I'll see what I can do. So fun little aside. I got our agreement, EKU's agreement with Bermuda College, because I got some friends out in Bermuda, and Bermuda is trying to become a big fintech place. And so they set up this whole thing called the Department of, Financial Technology, So they got a whole little ministry in the government on fintech. So I'm sure I could probably get somebody there to talk a bit about it. They're not wanting to necessarily do tons of coins, but they do have a procedure for, you're mentioning an IPO. They have also an ICO, an initial coin offering. So the first time the coin is brought to the public after it's been mined for however long, people get involved in that for that initial rally as well. And Bermuda is one of the markets that people take coins public through.
Okay.
So let me reach out, because I would love to be able to tell you all this great stuff about, Bitcoin and all that stuff. The only crypto that I have is the stuff that I get from the internet, right? Because I'm one of those weird people that uses obscure browsers and stuff like that. So I get paid in cryptocurrency for watching commercials and stuff. And so all the crypto I have is that. And I'm like, I feel like a kind of an idiot sometimes. Back in 2009, I had a guy that told me I should start mining Bitcoins with him. And I was like, no, that's stupid. I'm not doing that. And I don't know how rich I would be. I would have my own island in the Caribbean or something, probably. So I missed out on because back then, Bitcoins were like, 50 cents for a Bitcoin or whatever. And they're, I don't know, thousands of dollars now,
Well, don't get too discouraged, because there's so many like coins out there that you don't know which the next one's going to be.
Right. Yeah. You don't know. Like that's the weird thing is it's a completely virtual asset, right? And
interesting you brought up virtual, because there's this new coin. It's called Mana, MANA, and it's called Decentraland. And like with the way that technology is going, Decentraland is a VR, like kind of like a Sims.
Okay. Second Life kind of thing.
Yeah. So it's driven. So it's an NTF, and it's driven by this decentralized coin called Mana, and you can like use it to buy. There's banks buying virtual real estate in this world. I read an article, and I sent it to Ramon last week, and this investment firm spent $150,000 on a piece of virtual real estate in this Decentraland.
See that's what happens when you go from 5.5 billion in your currency to 18, or 5.5 trillion to 18 trillion in your currency. I guess is you start running out of things like land to buy. You got to make virtual land for people to have somewhere to put money, right?
I think in that game too that Nick's talking about, Atari is going to add a casino where you can gamble with the Mana coin and another coin.
Of course. Why wouldn't you, right? So
David, are you invested in Mana?
I bought a little bit of it at 40 cents, and then it spiked up to like $1.20 or $1.40 something. I sold, didn't buy back in, but
no, you gotta hold it.
Yeah, diamond hands, right? Actually I had to write up the GameStop short squeeze. I'm sure some of you guys you seem to be pretty in the know, so you probably know exactly what I'm talking about. For the ones that don't, GameStop was shorted 140% of their value, right? So not only was it like people had sold off every share, but they sold off every share plus 40% more, right? And so some investors on Reddit saw that and said, hey, if we just buy it and don't give it back to them, then they lose billions of dollars. And they did. It was 6 billion last I saw. So, but yeah, it was interesting because I'm writing up the case, you know, because when you're a professor, that's what you do. You write stuff, and sometimes people publish it. And so I wrote up this case, and it was weird because I was having to try to explain to people like things like diamond hands and together ape strong and stuff like, you know, it's like sometimes it's hard to explain to an academic meme culture, you know, so it was interesting.
Did you get Dogecoin? Did you ride that roller coaster too?
I did not. These guys here are the much more risk tolerant investors than I am. So I'm more of the boring ETF guy, you know, that kind of thing. So I'll throw money more often into small businesses. You know, I just really love knowing that I've got like there's a local like farm to table food like restaurant, you know, down the street from my house.
Oh, wait,
You know,
I don't mean to cut you off, but do you live in Rock Castle?
no, I live up in Georgetown.
Oh, okay.
Yeah, which is like forever away from here. I know. Well, so I say here, like I don't know if everybody's in Richmond, but I'm in the office right now, so I'm in Richmond. But yeah, I live up in Georgetown. My two oldest sons are both really big robot nerds, and so they wanted to go up there because the new school, they're at Great Crossing. So Scott County split, and Great Crossing got all these robots and stuff from Toyota. They just like went and gave them all sorts of stuff. So they've been working on that. So I've got really nerdy kids. So I don't know. They didn't get it from me, and I'm just a finance professor. So, but yeah. So my oldest one actually went to Japan like 3 summers ago, and then he's like, oh, I'm going to University of Chiba, I'm going to go do, you know, and I'm like, hey, do whatever you can pay for, you know. So I'm actually a disabled vet, and so my kids get free tuition in Alabama, like it's like a state law there. And so I told him, you can go there, you know, I've already paid for your education if you go there, so I'm not doing it for you to go somewhere else. So you know, you'll be stuck watching football games, but there you go, you know. So but yeah, let's see, I think we've covered everything that I needed to cover. I'm going to, like I said, I'm going to have that other video, but YouTube kept kicking it back to me, so just be on the lookout for that to come up. And then you'll also see some PDFs hit that course documents, and I think that's about it. I just wanted to, I'm also going to create a discussion board thing for you guys to write up a little introduction of yourself. I know you guys have all met each other. And so like Drew's like, I don't want to hear Vivian's story again. And Vivian's like, I don't want to hear Ramon's story again. So I'm just going to create a discussion board post, and you guys could just put it there and let me know, you know, a bit about yourself. I'll write up some questions for you to answer to make it easier for you, but just to help me know more about you. But just so you know a little bit about me, I'm from Birmingham, Alabama. So if you know anything about Alabama, it's the biggest city. It used to be a steel production city. My dad was a coal miner, so I grew up you know, in coal country. I understand a lot of that here in Eastern Kentucky. It's a different type of mining because he was like a mile underground. They don't do rooftop mountaintop removal in Alabama. It's too flat. So they got to dig down. So he did that. He's retired now, and my parents now live in just north of there, and they've got Black Angus cattle. So they've got a working farm now. So my kids like to go to grandparents because they've got hay bales and horses, and you know, just they get to pretend like they're farmers, you know, and all that stuff. But they don't actually have to farm, so it's the best kind of farming. So I grew up in Birmingham. I went to school at Auburn to begin with, university. And then after I went for about a year. I was like, I shouldn't be in college, so I joined the Navy. So I did that for almost 10 years. I went in initially to run nuclear reactors, and I ended up being a SEAL intelligence analyst. So it's kind of, my career went kind of sideways, but I got hurt when I was in Afghanistan. So when I got out, I actually was a door-to-door salesman. I'll tell you guys some funny stories about that. But I did that for a little bit when I first got out. And one of the homes that I sold to, the husband was so impressed. He said, you should come by my office. And he actually ended up giving me a job as a stockbroker. And that's how I ended up getting into finance. I went from being door-to-door sales to selling stocks, but I got licensed, obviously, right? So you have to take a test and everything and show you can count. But so I did that. And then about that time, the VA had worked through their backlog because there was a big one after we first went into Afghanistan. And they sent me to Alabama to get my MBA. And so my MBA is actually in supply chain redesign. So I'm a logistician, right? My first job after that was working with International Paper out of Memphis, Tennessee. And so it's the world's largest paper company. So you probably use International Paper's paper because they make all of the Staples paper as well. So I mean, because paper is paper, and they make most of it. And my job there was freight costing. So I was making sure all the trains and truck drivers and everybody was being paid on time and all of that stuff. So learned all about freights and railroads and freight forwarders at ports and how shipping containers work and all that stuff. And decided to go back to school, and I got my PhD also at Alabama. So also got a couple of masters while I was there. I got a master's in women's studies. I showed you the picture when I was in Bangladesh. And so I was in Bangladesh doing rural development with a company called Grameen Bank. So I don't know if you've ever heard of it. A guy named Muhammad Yunus started it. He got the Nobel Prize for it, the Peace Prize. But they do loans to women. Like that's their only market is women. So it's a predominantly Muslim country, Bangladesh. There are Hindus there, some Christians, but it's almost entirely Muslim. And so there's a lot of cultural restrictions on borrowing and lending and things like that. So I learned a lot about Islamic finance, and so that was really really interesting for me. But I decided, hey, I don't really enjoy living in villages too much. Did enough of that when I was on active duty, so I was like, let me do something that's a little bit different. And since I was already doing risk, I came back and then I started doing risk some more, but I was working for Swiss Re. So I know somebody, was it David? Were you the one that already took RMI?
Yeah, I think it was just a risk management undergrad with Dr.
Yeah.
Gardner.
Yeah. So I don't know if she ever mentioned like reinsurance in that class. But for those of you that haven't taken it, reinsurance is just insurance for insurance companies, right? So State Farm is like, hey, I'm insuring $20 billion worth of homes here in South Florida. Let me move some of this off the books because a hurricane can hurt pretty bad. And so that's what reinsurance does. So I started working for reinsurance doing hurricane modeling. And so it's the same kind of stuff I was doing in Bangladesh, just much bigger numbers, that I was involved with. That's how I got to work with people in Bermuda, because Bermuda does, it's the third risk capital. So it's London, New York, and Bermuda of all places, right? So, and I actually, had a group of students in Bermuda with me for a study abroad when COVID shut us all down last year. So that's to kind of give you a sense for that. So I lived in Switzerland for a bit when I was in grad school. So after I came back from Bangladesh and I said, no, I'm switching, then my advisor, who was one of the risk management professors, he said, well, we got to get you some new data, so I'm gonna have to send you somewhere else. And so I went to this small town called St. Gallen in Switzerland. And so if you can imagine the difference in going from a tropical jungle environment in Bangladesh to being in the Alpine mountains there in Switzerland. It was a little bit of a culture shock, I think. But yeah, I lived there for a while, with working with Swiss Re, doing modeling and stuff. And so not that kind of modeling. I was in Switzerland, not Milan, but no, I was a model maker, you know, for Swiss Re and stuff. So and once I finished my PhD, I got hired here at EKU. So this is my first professor job after grad school. So so kind of a convoluted story, I guess, but that's how my life went. So I have now lived in the United States longer than out of the United States while an adult. So I've been here long enough to do that now. It seems like I didn't live in the US much once I was about 19 years old. But it's been a wonderful ride. So and I am not sure how the time thing works, because I know I'm supposed to have 3 hours of instruction, but I have the videos for you to watch. And as I understand, that's part of that. Is that how you guys understand that as well?
Yeah, I understand it as well like that.
Yeah. So I'm not going to hold you guys because there's the one video up, but there's another one coming, and it's a good bit bigger. So I think that's why YouTube is having some problems with me loading it, as it's a little longer. So so I'll cut us short then for the evening, and everything, and just look for all those documents and everything to hit, and then we'll go from there. If you have any questions once you start reading through stuff, by all means, shoot me an email. As much as possible, I like to answer questions like this, so everybody's there. You know, it's kind of like being able to answer it in class. So if I don't answer your email right away, just understand I'm probably holding it. This you sent me this morning, Derek, so that's why I didn't like write you back right away. But normally I would go ahead and write you back and say, hey, that's pretty good. Remind me to bring this up in class. Because a lot of times, if one person has the question, there's probably about 4 or 5 people that like to hear the answer, right? So like we started talking about crypto, and then David and Nicholas start jumping in, and Ramon, you know, started, you know, so a lot of people, you know, like to talk about that subject too. So it's another way for us to, you know, bounce ideas and everything off of each other. So so I know some people started shaking their heads, know that they weren't in Richmond. Is there anybody that's doing this purely as an online MBA? No one? Okay.
No, but I think that's a good idea though, Dr. Woodruff.
Well, it wasn't really an idea I had. It was one that was more given to me. Hey, you guys need to do this. So so I do appreciate that you do like it. The reason we're doing the particular classes we are, like accounting and finance and stuff, is I believe the online MBA, we're only teaching like 7 classes or something like that online. And then the other one are online classes that are in other schools that you have to take. So it's like an MBA, but half of your classes may be in like construction management. And so it's almost like an MBA with a heavy emphasis in construction management, right? So this is us trying to get ready for it, because we can't hire any new people, but we need to teach additional classes. So you know, we work with what we have. You know, I'm not a big public finance guy. So I can't speak too much to the Commonwealth's budget and things like that, other than to say that we're not counting on getting a whole lot more from them, right? Because K through 12 schools have issues, the pensions got issues, right? So I mean, there's a whole lot of first responders need to have to still be replenished on stuff that they lost during COVID. So we understand we're not at the very top of the list, as important as we feel we are. So we all are doing what we can. So so I appreciate you guys being good sports and being our guinea pigs and letting us do this online class with you. So if there's anything as we're doing this and you're like, hey, could you do this instead? Let me know, because I'm still trying to learn how to do this well. I've gotten a lot better, I think, at sharing my screen and stuff like that to show people pictures, because I always try to talk with my hands. I'm used to having a whiteboard. I like to draw pictures. That's my big thing. I draw lots of pictures in class. You know, you get done, you look at your notebook. If you only copy down what I wrote, you just have a bunch of like really cool diagrams. You know, because I don't write a lot of words. I just draw pictures and I say the words. You know, but yeah. So that's yeah. So that's where we are. So if you guys don't have anything for me, I'm gonna go ahead and let you guys go. And we'll just always meet like this. We probably won't go terribly long because we're going to have so many between class lectures as videos for you guys to watch. And also that way, once we end, if you guys want to meet as a team, you can still do it Thursday after class, right? Because you're just like, hey, we were already all together, you know, and everything. So we can just meet up at 8 o'clock and finish up that case or whatever. So, all right. So if you guys don't have anything for me, I'll let you go. I'll put this recording on YouTube, so you'll see it drop in, but you're also going to see a few other videos drop into that playlist. Cause I know I'm going to put one for time value of money. You know, and I'll probably put like 2 or 3 little videos. They tend to be short. They tend to be, if not funny, at least like entertaining, right? It's they try to be something that holds your attention. I know my lectures don't, especially when it's just me speaking into the void for, you know, however long, because there's no interactions or anything like that. I need to get a good way of breaking those up into like little 5-minute clips or something for you guys to watch easier, you know, but I got to figure that out. I don't know how to do that really, but yeah, just look for that and then let me know if you have any questions. And that said, have a great night.
Dr. Woodruff, could you stay back and talk to a few of us for just this minute?
Oh, show. Yeah, of course. When I was in school, we used to call that pit diving because we had those big auditoriums, you know, and class was over, then all like the students would like come down. We said they were pit diving. They were ready coming down into, you know.
There you go. So me, Ramon, Jackson, Nick are on the baseball team, and I know Melissa's on the softball team.
Okay.
So especially with class being on Thursday nights, I know for us, Thursday is usually our travel day.
Okay.
So we're probably gonna miss a couple of classes.
All right. So I'm gonna record stuff. Yeah, I'm gonna record stuff for you guys. So don't worry about that piece. So how are you guys doing baseball? It's so freaking cold up here.
We're doing all right.
Yeah. I see I'm from Alabama and I'm like, it gets below 60 degrees. I'm just like, why are we going outside?
Yeah, I hear you.
We played with snow on the ground before.
Yeah, that's just wild. And then softball's really big actually in Alabama. I don't know if you know that, Melissa. It's a bit of a state pastime. Like everybody really comes out for the softball. So when I was there, they were real. Actually, they're doing pretty good this year though too. But when I was there, they were doing really good. And you couldn't get seats anymore. You know, because they didn't really charge anything is what the problem was. They needed to make people pay to get in. But yeah, it was. But yeah, I'll make sure that we have everything recorded for you guys. And it won't hurt you because I have to be able to do this for online anyway, right? And this is me learning how to do that. And so you guys are going to be like my e-campus students. And e-campus, we're not supposed to put them on synchronous because that's part of like why they're on e-campus is so they can do it at 2 o'clock in the morning when they just got off the midnight shift or whatever, you know. So we have to have all that stuff available. So as long as you guys don't mind being my little guinea pigs and everything, then
so I know us four are definitely gonna miss next week's class.
Okay.
We're traveling to Edwardsville, Illinois. And we'll have practice next Thursday night. So we'll just email you, I guess, constantly and, you know,
just let me know. And what would be really great is actually let me know on Thursday, like remind me,
Yeah.
don't forget, we're all on the bus, whatever. So, so yeah, just let me know just to remind me, but yeah, it won't penalize you at all. Like I said, I need to learn how to do this for eCampus anyway. But where are you guys from?
I'm from Lexington.
Okay.
I'm from Atlanta, Georgia.
Atlanta. Okay.
From good old Syracuse, New York.
Syracuse. Okay. So my complaining of cold like falls on deaf ears with you.
Yeah, I know. Yeah, Syracuse is the snowiest city in America. Over
Yeah.
20 inches a year.
I'm
from,
you go.
sorry. I'm from Cincinnati, and I've also been in your Finance 300 class and your risk management class. I don't know if you remember me, but
Yeah. You look
Yeah.
familiar, but then I wasn't sure, and I hate to ever say because I'm terrible. My memory is just shot.
Yeah.
Yeah.
I'm from a
But-
small town out by Cincinnati.
Okay, so you're okay. So both of you guys are from like at least the Cincinnati area. Where in Atlanta are you from, Ramon?
I say like by Camp Creek, where the airport's at. Like 10
Okay,
from the airport.
I got you. When I was a kid, we used to go to Braves games and they would give away tickets because they were so.
Oh yeah, the Turner Field. Yeah.
Yeah.
No
And,
support down there for the Braves.
yeah, well, I mean, this is before like the 90s, because the 90s they were just, just killing it. But back in like the mid 80s, early 80s, like when I was a kid, you could go to Atlanta and you'd stop at the McDonald's that was there at the field. And if you bought a Happy Meal, they gave you a ticket to get in.
Yeah, that's pretty cool.
Load up in a
Sweet
van
deal.
and ride out to Atlanta to watch a ball game. And, it'd be, you'd eat a Happy Meal to get in the game. And then while you was there, you would, eat a bag of cotton candy and a hot dog or whatever for, like $3,
That's pretty funny. They used to give away tickets. Like when I was in elementary school, they would literally give away tickets for coming to class to the
Yeah.
the Braves and then the Thrashers when we used to have the hockey team.
Right. So, but these guys, I know you guys are probably Reds fans, right? The Cincinnati.
I'm a diehard Reds fan. Yeah.
Yeah. And then Jackson, do you have a team you follow or?
No, he's just a bandwagon.
Facts.
I'm a Tigers fan. My dad actually coaches for the Tigers, so
Oh, okay.
I kind of have to be a Tigers fan.
All right. And Nicholas, who are you pulling for?
The Red Sox.
The Sox? Oh, okay.
Yeah.
All right. Very cool. Yeah, very cool. Wow, I haven't talked about baseball in a long time. So I used to always go watch Mississippi State baseball games. I don't know if you guys ever played ball down like in the deep South. It's just like a little, I don't know. It's just country, right? I don't know how to explain it, but
We played at LSU last year, and it was a lot different atmosphere than it is up here. Yeah.
Yeah. And so they had the left field lounge is what they called it at Mississippi State, and everybody would just back their trucks up so that they would sit on their tailgates. And so everybody would be out there sitting on the back of pickup trucks, and people would like build little bleachers to put in there, and people would go and you see all these pickup trucks, and everybody's out there, watching the game. So
this had to be before they built like the condo apartment type deal.
Yeah, I don't know what the field looks like now. I think all that SEC network money has built up a lot of facilities, because I know Alabama's was pretty bad, and then I saw pictures of it online, and they those little kids amusement parks there in the promenade, and all. It looks like a major league park almost, with like some of those amenities around it, so yeah. But I used to work for ESPN events, and I used to do bowl games and stuff. So I never did any cool like baseball or softball tournaments. They would happen, but I was never free then. I was always free in bowl season because the semester's over and the new one hasn't started. So I was always able to work bowl games, and so I would do that, doing risk management for bowl games. So
awesome.
So I did that, and I've done some kickoff games. I'm trying to set up one for EKU now, actually. We'll go down and play either in Georgia or Alabama. We'll try to get a field and everything together too. So going to be one of those TV games. So ESPN will put it on for us. So we're trying to get money for you guys in athletics. So we doing what we can. So I'm not like the FAR or anything like that. I'm just on the budget committee at EKU. So and then I knew Matt or AD Roan, before like when he was here the first time, stuff. And so I told him I'll do anything I can now that we got to deal with all this ASUN stuff and all this. And I know these schools, we'll deal with them. So,
Well, all right. We just want to let you know that we'd be missing some class and that we'd have to email you and stuff.
Yeah. So just please email me each Thursday that you're going to be gone, just to remind me. And we're good.
For sure.
Thank you. I appreciate it.
Thank you, Dr. Woodruff.
Yeah, have a good night.
Good job.